Hey traders, welcome to our AP1 tutorial. The AP1 is our flagship advanced pattern here at the trading channel. And in today's video, I'm going to show you guys exactly how to trade and test this pattern. So the AP1 is a 5-point pattern that consists of a series of Fibonacci retracements that eventually give us an entry that is testable throughout historical data that we can verify, creates an edge over the market, and that we use on a daily basis here at the trading channel in order to pull profits out of the market. What you see on the screen is an example of what the AP1 will look like, but what I'm going to actually do is go ahead and start this tutorial by deleting everything we see. So let's take all of this off and let's start with a blank white screen. The first thing we're looking for with the AP1 is our 1-2 move. So as I said, we have 5 points to this pattern. The first point we have, we're going to label as point 1. The second point we have is point 2. And this 1-2 move is going to be known as our impulsive move. On this impulsive move, what we're going to do, we're going to take a Fibonacci retracement from the swing low of 1 up to the swing high of 2. So if I can draw some candles out here really quickly, what you'll see is, we change the color of that, make it a little easier to see. Put another one up here. We'll put some wicks on these candles. So let's say this was the case, right? We have the starting point, or our swing low, right here at 1. We would have the Fibonacci retracement pulled from the swing low of that candle up to our number 2. We would go to the swing high of this candle, which would more than likely be red. So let's actually change that color. And that's going to be known as our 1-2 move. Now for this 1-2 move, the reason we just pulled this Fibonacci retracement is because we want to see this 1-2 move give us a 50% retracement. We need at least a 50% retracement from this 1-2 move. What I'm going to do now is actually make this a little bit thicker, just so it's easier for you to see. The green right here, 0.5, is our 50% retracement. So for this specific pattern, what we're looking for is a push down that is at least a 50% retracement. Now the next rule we have is that we have to touch 50. We have to touch the 50% retracement, but we cannot touch the 618 retracement here for the AP1 pattern. This is going to be known as point number 3. So point number 3 has to touch a 50% retracement. We'll actually draw a candle here, but cannot touch the 618 retracement. So if we were drawing a wick on this candle, an example of what would not be valid is that right there. The touch is what matters. This candle cannot touch the 618 retracement. So this would be an example of not a valid trade. This would be an example of a valid trade, or at least a valid third point, right? A valid point number 3. Now another thing that would be example of a good scenario or a valid point 3 is this. As long as we touch that 50% retracement, whether it's with the wick or the body of the candle, and we do not touch the 618 retracement with the wick of the candle, then this is a valid point number 3. So our 1-2 move is a 50% retracement that doesn't touch the 618 retracement. We'll go ahead and delete these Fibonacci's for now. That's what we have right here. So we know that's a valid 1, 2, 3 move. The next point we're looking for is going to be point number 4. As we talked about at the beginning of this video, this is a 5-point pattern. So for point number 4, the way we find that, again, this AP1 pattern is a series of Fibonacci retracements. The way we're going to find point number 4 is by taking a Fibonacci retracement from 2, the swing high of 2, down to the swing low of 3. Once we have that Fibonacci retracement pulled, what we're looking for out of this market is at least a 382 retracement, our red line right here. A 38.2% retracement of 2 down to 3 for the bullish form of this pattern is what we're looking for point number 4. So let's go ahead and draw that in as point number 4. Market comes up. Let's say we hit that 382 retracement right here. This would be valid. And let's actually draw out a zone of what I call validity. A zone of validity for the AP1 to get to point number 4 is our yellow box. So what that means is that point number 4 has to hit the 382 retracement with at least the wick of a candle and cannot go up and touch point 2. So this entire zone you see is where this market can close, where this market can turn around and head down. And as long as we have that rule met, then it's a valid point number 4. So let me give you some examples of what would and would not be a valid point number 4. Move this out of the way. So if we have a candle here that looks like this, and let's say has a wick to the high side that does this, is that a valid point number 4? Yes, this would be a valid point number 4. Now what if this wick comes all the way up to here? That would invalidate this trade. What if we have a body of a candle all the way up here? That would invalidate this trade. What if we have a candle right here and it has barely any wick on it? Is this a valid AP1 point number 4? Well, is it in our yellow box? Does it terminate in that yellow box we have? Yes, it does. So this would be valid as a point number 4. Hopefully this is making plenty of sense for you guys. I'm trying to go through this as slowly as I can to make sure everyone comprehends and understands this AP1 pattern. So place our point number 4 right here. This would definitely be a valid point number 4. Next thing we're going to look for is our final point of this pattern. We'll delete these Fibonacci's. The final point of this pattern is point number 5. So let's head down to point number 5. Now point number 5 is going to be a Fibonacci retracement just like the very first one we did. The first one we did, we went from the swing low of 0.1 to the swing high of 0.2. That's what we're going to pull again. As we can see, we have that valid 50% retracement on point number 3. We know because we just looked at it, this is a valid point number 4. The next thing we're going to look at is an 886 retracement of 1 up to 2. The 886 retracement is going to be our final 5-point completion of this pattern. So at this point number 5, at our 886 retracement is where the actual limit order would go for the buy entry on this specific pattern, because this is a long entry on the AP1. So that 886 retracement, we would have a stop loss under 0.1, and we would have a target at the 382 retracement from 2 down to 5. I went a little quickly there because we're actually going to discuss stops and targets a little later on in the video. It's not something you need to concern yourself with as of right now. So what I'm going to do is put on the screen the Fibonacci sequence that we need in order to trade the AP1 here at the trading channel. For our 1 to 2 retracement, we need a 50% retracement. We then need to check the 2 to 3 retracement, pulling from 2 down to 3 in this bullish scenario, and see that number 4 hits a 382 retracement but does not touch 2. We then need an 886 retracement of 1 up to 2 for the 5-point completion of this pattern, where I would have a limit order in the case of how I trade the AP1. So this pattern looking something like this, coming from 1 up to 2, hitting the 50% retracement and not touching the 618 retracement, going from 3 up to 4, hitting the 382 retracement. I'll draw that in actually. 2 down to 3, hitting that 382 retracement right here, but not closing or touching 2, coming down to our 886 completion point for point number 5 of this pattern. This is exactly what the bullish version of the AP1 is going to look like on a chart, and that's the series of Fibonacci retracements we're going to use in order to identify this as a pattern. We're going to take a look at these down on actual charts here in just a second, but right now what I want to do is actually flip this over, turn it around, and show you guys a bearish version of the AP1. Then we'll take a look at stops and targets. Then we'll actually go down to the charts and take a look at a couple of trading opportunities based on the AP1 strategy. Okay, so now let's work on the bearish version of the AP1. What we're going to look at here is a 1 down to 2 move. Let's say that's our candle that we start at for our impulsive move. This candle must be a swing high. We then push down. This is a bearish version of the AP1. So we're going to be moving down in our impulsive move. We push down to number 2. So same rules apply, just in the opposite direction. What we're going to do is take a Fibonacci retracement from the swing high of 1 down to the swing low of 2. Now for this move up to point number 3, what do we need? If you said we need a 50% retracement that doesn't touch the 618 retracement, then you would be absolutely correct. That's exactly what we got here for point number 3, is a 50% retracement that doesn't touch 618, making that a valid point number 3. We'll delete these Fibonacci's. We then look for a move from the swing low of 2 up to the swing high of 3. Looking at this move, we are looking to see if we get a 382 retracement that does not touch our 2 point, which is all the way down here of this pattern. Do we get that? Yes. Point number 4 is valid because we touched 382. We are in our zone of validity, which is this big. We touch 382, we don't touch 0.2, the swing low of 0.2, therefore we have a valid point number 3. The only thing left to do at this point is to pull a Fibonacci retracement from 1, the swing high of 1, all the way down to 2, just like the very first Fibonacci we pulled, except at this point we're not looking for point number 3, we're looking for point number 5, which will be the 5 termination point of this pattern at the 886 retracement of 1 down to 2. that is the place where we will put a limit order in expectation for this market to fall, because this is the bearish version of the AP1 pattern. All right, guys, so is that making sense? Hopefully it is for you. Hopefully you're able to actually comprehend every bit of this. I went pretty slowly, but you're still gonna have time to learn a little bit. Also, you can rewind this video. That's why it's pre-recorded. And right now what we're gonna do is we're gonna discuss stops and targets. We're gonna do this on the bearish version first, and then we're gonna go down to the actual charts. We're gonna look at some candlesticks and find a couple of opportunities based around this AP1 pattern. So here for stops and targets of the bearish version of the AP1, we're gonna pull a Fibonacci retracement from the swing low of 2. We're going to go from the swing low of 2 up to the completion point at the 886 of 0.5. We're going to leave our Fibonacci's just like that. We're going to put our position tool on here, or you can measure this with a ruler tool, whatever you'd like to do. We're then putting a target at the 382 retracement from 2 up to 5. We're putting a stop loss 1 ATR above 1. So if I bring an ATR indicator up, this is something we've discussed multiple times in the course already. Specifically right now, if we're looking at the chart, we're going to use the ATR of our entry candle. So let's say we enter the market right here on a candle. The ATR of that candle is 11. That's what we're using as a stop loss. We're putting a stop loss 11 pips above the swing high of 0.1. So we have 16 plus 11 is going to be 27. 27 would be our stop loss on this specific trade. We would have a target at the 382 retracement, and that's exactly what that would look like. That's the exact way we're going to be trading and testing the AP1 in the bearish direction. Now, in the bullish direction, it's completely the opposite of this. I'll actually go ahead and do a brief example of that, run through it really quickly for you, and then we'll take a look at the charts and look at some trading opportunities on actual candlesticks. So let's go ahead and look at a bullish version of this. Okay, traders, so here's a bullish version of the AP1. What we're going to look at for the targets on this AP1 for a bullish version is we're going to take a Fibonacci retracement from the swing high of 2. We're going to pull it down to the 886 completion point, the 5 point of this pattern. We're going to grab our precision tool again, or you can take your ruler tool and do this. That is where our entry would be. We would take a look at ATR of this candle. Right now we're looking at a 10 pip ATR, so 10 plus 16 is going to be 26. And our targets are going to go at the 382 retracement. So that's how we would place targets on a bullish version of the AP1. Now what we're going to do is head down to the charts. We're going to actually take a look at a few examples of this on market data. So let's go ahead and do that now. Okay, traders, so here we have our first real example of the AP1 pattern. See if you can spot it out before I label the points of this pattern. Hopefully you were already able to see it based on the training we just went through. Here is point number 1. Point number 2 of this pattern is here. Point number 3, point number 4, and point number 5, the completion point, is right down here. Now, let's go ahead and figure all these points with the correct sequence of Fibonacci retracements. If you'll remember from previously in the video, we know that from the swing low of 1, this impulsive move up to the swing high of 2 must hit what? This initial move right here must at least touch the 50% retracement, but cannot touch the 618 retracement. Do we get that for point number 3? Well, the answer to that is yes. So next up, what are we doing? Well, after we know we get a valid point number 3, we take a Fibonacci retracement from 2 down to the swing low of 3. We check for point number 4, which has to touch the 382 retracement here and cannot touch the 2. Do we have that? Yes, we have a valid point number 4. Now, finally, the final point of this is the 5 point completion of this pattern, which we go from swing low in the bullish case, swing low up to swing high of 1 to 2, and we look for that 886 retracement. Do you guys see how well this market came into the 886 retracement right here? Came right there at that 886 retracement and immediately pushed up, hitting what would have been multiple targets on this trade. So this being a valid advanced pattern. Now, the reason I picked this one, let's go ahead and draw it out so I can show you what it would look like. It's going to look something like this: 1 to 2, 2 to 3, 3 to 4, and 4 to 5. Now, I picked this pattern specifically for a reason, because if I leave the Fibonacci's on there, I'm going to go ahead and delete the pattern itself. I've had a lot of questions throughout the years of traders asking me things like this. The first question I would normally get is, well, I see what you did, but I don't understand why you did it. Why didn't you pick this as point number 3 and this as point number 4? So why did this pattern not look like this? 1 to 2, 2 to 3, 3 to 4, 4 to 5. And guys, the reason for that is because this resistance broke this resistance. So we're looking for that highest point. Number 4, point number 4 is the highest point after the 2 down to 3. So we look for 2 down to 3. 3 is going to be the lowest point before 4, which happens to be right here. 4 is going to be the highest point after 3, which happens right here. So hopefully that was able to make a little more sense. I'm going to show you guys another question that I get very often. So hopefully you understand why this is point number 3. This is the lowest low after our 1 to 2 retracement before we hit point number 4. Point number 4 is the highest high. As you can see here, point number 4 is higher than any other high after point number 3. Point number 3 is lower than any other low before point number 4. Now what we're going to discuss next is why is this not point number 3? So another question I would have that's pretty common is why didn't we do this? Why isn't it 1 to 2, 2 to 3, 3 to 4, and 4 to 5? Right here. The answer to that is very simple. And it is just like our point number 3. From 3 to 4, we did not break this resistance level looking left here. With that being the case, this is still our valid number 4 because it's the highest resistance after our number 3 here. So this is the correct way to look at patterns. We're looking at 1 to 2, 2 to 3 right here, 3 to 4, and unless this gets broken at some point, unless this resistance is broken, unless 4 point is broken, then our 3 point stays exactly where it's at as the lowest low before number 4, and our 4 point stays exactly where it's at as long as we don't get a new high above it. So hopefully that made a lot of sense to you. Hopefully that cleared any questions up. Again, our valid bullish AP1 looks just like this. In this specific trade, we're going to go ahead and do stops and targets for it. We would have a entry here with a limit order, guys, and that's the way I trade these. You can test it to trade it differently, to trade it as a potential reversal zone or any other way you'd like. Wait for a candlestick entry. However you would like to do it is fine. I'm just going to talk you guys through the way I personally do it. In no way is that me telling you you have to do it this way, but what I normally do is I place a limit order directly at point number 5. So right here at point number 5 on that 886 retracement, I would have a limit order. Our candle is right here. This is our entry candle. With that being the entry candle, I'm going to hover over it and I'm going to look up at our ATR. As you can see, that's a 12 pip ATR. So I'm going to go to my swing low of 1. I'm going to look at that. That's 9. 9 plus 12 is 21. So I know I have a 21 pip stop loss on this specific pattern. Now with that 21 pip stop loss, my next step is to find targets. The way we're going to look for targets is from the swing high of 2 down to our entry, not down to these swing lows. At least for me, this is the way I've tested it and the way that has provided profit for me. You can test it however you would like, but for me, I'm going to discuss the rules I actually use in this AP1 pattern. And the way I pull my targets is from 2 down to the entry of the 886, and I look for that 382 retracement. As you can tell, that gives a 1.29 risk reward on this specific pattern. If you would like to look for multiple targets, we're going to discuss a little more about advanced multiple target taking on these specific patterns a little later on in the course. But right now, what we're going to talk about is just a Fibonacci based second target, which would be at the 618 retracement. So you'd have target number 1's at 382, target number 2 at 618. And that's how you could take multiple targets on these patterns. That's the bullish version of the AP1, an example on the chart. Next up, we're going to take a look at a bearish example on the chart, and then finally we'll take a look at a live trade for the AP1. Okay, see if you can spot the AP1 without me pointing it out on the chart right now. I'm going to go ahead and label the points of this AP1. Right here we have point number 1. Down here we have point number 2. Right up here, point number 3, followed by 4, and followed by 5. So now that makes it a little easier, right? What we're looking for in the bearish version of the AP1 is from the swing high of 1 down to the swing low of 2. And at this point, we're looking for what? We're looking for that 50% retracement, which is right here. Do we hit it? Yes. Do we not touch the 618 retracement? Yes. So we have a valid 0.3. Now what are we looking for? Next up, we're looking for that Fibonacci retracement from 2, the swing low of 2, for a bearish version of this pattern, up to the swing high of 3. Our role here is that we need the market to touch the 382 retracement. Do we touch that 382 retracement? Yes. Do we not touch the number 2? Of course we do not. We're way up here. We're even above 50% retracement. So we know that's a valid point number 4. Last thing we need to look for is the completion point of this pattern from 1 all the way down to the swing low of 2. We're looking for that 886 retracement. Do we touch that? Yes, we do. The red line right here is our 886 retracement, which we get a valid entry on. Now, let's go ahead and put our position tool and talk about stops and targets for this specific bearish pattern here on our AP1. I'll also draw this out. Looks a little something like this: 1 to 2, 2 to 3, 3 to 4, 4 to 5. Now our entry goes at a limit order, at least the way I trade this pattern, of 5. Right at 5, we put our limit order. We look at the ATR of our entry candle, which is right here, 12 pips above 14 pips. It's going to put us at 26 pips. As you can see, this market did not quite stop us out. That 26 pip stop loss would have held as a valid stop loss, would not have stopped us out. We then pull for targets from the swing low of 2 up to our entry point 5. When we get that target pulled, we then pull our position tool down. We see that we get a 1.7 risk reward to our first targets here on the dollar Swiss on our bearish AP1 pattern. And then of course, as we talked about earlier, if you want to do second targets, those would be placed down at the 618 retracement, at least for now, before we discuss the ways of taking more advanced second targets on these types of patterns. So there's a bearish example of the AP1 on price action. The last thing we're going to do is take a look at a live AP1 trade, and then you guys should have all you need in order to take this pattern, go through the markets, back test it, create a trading plan around it yourself, and then implement it in the markets as you wish, as long as you're comfortable with the risks involved. So let's go ahead and take a look at that live pattern, and that'll be the end of this training video. All right, traders, so here's our live example of the AP1. As you can see, if I take a Fibonacci retracement from 1 up to 2, we have a 50% retracement that does not touch 618. If I grab another Fibonacci retracement, bring it down from 2 down to 3, you can see that we hit a 382 retracement pretty easily. We do not touch 0.2. And finally, you'll see that our limit orders are sitting at that black line, which is our 886 retracement from 1 to 2. Now for targets, after placing our limit order, we pull from 2 all the way down to 5. And that's how we got that 382 target. Our stop loss was a full 1 ATR below this previous low, which put us right here. So that's a live trade example. I'll wait and see if this trade actually gets filled, and I'll record that for you guys as well. And I'll see you guys whenever we come back. Okay, traders, so here we are on that Canada Swiss. We're on the live trade we took out earlier today. This trade ended up filling at our 886 retracement for our AP1. And as you can see, we're getting pretty close to hitting targets here. So we're just gonna let this trade play out. I'll keep the recording going, and we'll see if we can hit the take profit on this trade. Okay guys, there we go. As you can see, target 1 hit here on our AP1 live example. Let's go ahead and take a look at this trade. Let's talk about these ratios. We have our 1 to 2 move right here, which is a 50% retracement that does not touch 618. We'll delete those fibs. We had our 2 down to 3. Our 4 point needs to be a 382 retracement that does not touch 2. That's a valid point number 4. And point number 5 needs to be from 1 up to 2. That 886 retracement. As you can see, the market coming down into that red line, or 886 retracement, immediately pushing off of that line and hitting these first targets for a win of 12 pips here on the Canada Swiss 15-minute chart. So that was our live example, and that's exactly how we trade the AP1 advanced pattern. If you have any questions about the AP1, feel free to email me at steven@thetradingchannel.net, and I'll see you guys in our next training video.